Good evening. Ira Epstein with your SPDR ETF wrap-up for Wednesday, the 23rd of February, 2022. All right, my friends, we're on the cusp of when the invasion takes place. Now, nobody can get into President Putin's mind to know the hour, the day, but everything is set up. He's anointed, as you know, 2 new countries that Russia has recognized. And those countries, you'll call them republics, I call them nonsense, but those 2 countries have now asked for Russian help, claiming there's genocide, they're being overrun, they need the motherland to come and protect them. And the motherland is getting ready. Troops are now within 5 miles, and I'm talking there's battalions upon battalions ready to go. The Ukrainian people have now gone into a state of emergency, not martial law yet. They have called up their reservists. People are moving. The president of the Ukraine is ready to be moved, in fact, to another city within Ukraine. So you will wake up one of these mornings. I don't know which one it's going to be. Nobody does except President Putin. And the invasion will be underway and the bloodbath will begin. And I know that I'm a trader. So as a trader, you know, I'm looking at the sea behind me and we'll go over the charts. But I can tell you this. This is where you get out your shopping list of companies that you want to buy as an investor, not as a trader. And you look at for them, what price would you want to own them that's realistic? And you're ready. You might even have resting orders in there, and you start nibbling away at them. I use the word nibble. You don't plunge in with both feet. You accumulate your position at some number. The charts are not what you do that off of. You might be looking at price-earnings ratios, other events that you want. But if you go back to these events in history, and again, I have 53 years of doing this, these type of events present those once in a decade, whatever you want to call it, type of areas where you step in. Think 13 years ago, 2008 and 9, the depth of the recession, the pandemic, everything going on. How bad were things, and then the market took off. You don't hear me saying that they have to take off again. I'm not going to make that analogy because we have inflation yet as another barrier that we have to get through. But inflation won't stop necessarily the spots that you start picking up those stocks. So warning, telling you what to do, shopping list time. Okay, I've decided to go with XME because it's one of my favorites. It's the mining and metals area that I like to look at. And the reason I like it so much is, number one, it will be impacted to a degree. You know, Russia does send out platinum, palladium. They're major exporters of it. Okay. I also believe strongly that inflation or not, the world economies are ready to pick up. And the central banks will be the enemy of that because they have to curtail the inflation. That is their mandate, and they will do that. That doesn't mean underneath it there's not going to be strong demand for these goods, for automobiles, for refrigerators. I can go on and on. It's going to be there. If you looked at Lowe's, they're looking good. Home Depot, they're accumulating inventory now. If you read what they're doing, there's a reason for this, and that demand isn't going to go away. So when you look at a weekly chart, this is, to me, a long base. This is one of the reasons that I'm in love with the metal markets. I could be wrong, and that love can turn into a divorce, right? That does happen, and how many people get married and get divorced? But you'd have to take out these lows to get me to the point of that, and even from here, that'd be a 20% loss. It wouldn't break the bank, all right? Things to do. Am I telling people to buy it up here? You know better. I never tell people to buy the upper Bollinger Band. So we go to the daily charts, and that's what we're going to cover now. So here's what the daily chart looks like. And as you can see, you have one of these, what I call ugly patterns. Let me explain it. You had an outside day on Tuesday. And when you have an outside day, the thing the market should not do if it's going to drop away is take out that day's high, which it did today. Now, where you get into trouble on the trade is if now you get back under Tuesday's low, which was 48.51. If that is taken out, then you get one of these patterns that goes like this. Until that occurs, and I'm not even saying it has to occur, I have an upside target as a chartist. The upside target is the upper Bollinger Band. So if 48, and I'm going to say yesterday's low of 51, right through here, do it again, is taken out, I have to go back to my thinking. If that isn't taken out, then I think the traders that are long at this point are looking at 52.33. If you take out 48.95 in that whole area there, then you have to be very concerned here with 46.63 as the next stopping spot. And if that 46.63 is taken out, where's that put you on the weekly chart? Not even yet to the 18-week average of closes. I then go and look at a number of moving averages on the daily chart. This is the 18-day. The green is the 100-day. And in the charcoal is the 200-day. So in between 46.63 to 44.20, the major support comes in. And I won't go back to the weekly chart, but it coordinates and ties right into what that is doing. I then take a look to see where the Bollinger Bands are. That's my target here if the market can get up there to that number. And momentum is embedded. Now, embedded means that you have converted the bullishness of a market, got overbought, and converted. Okay, so it's stages. Here's a market, and just concentrate down here. You were oversold, you start correcting that. Suddenly you get overbought. Well, in order to switch overbought into locking in a trend, you need to get both the red and the blue numbers, called a K and a D, up and over the 80 level. It has to do it for a certain amount of days. I teach all this in my enhanced Bollinger Band course, which is inexpensive as can be, on our website at www.iraepstein.com. By the way, what I'll do today is I'll put up here a link for you. Just move your cursor up. You'll see an icon. It'll take you right to that area if you decide to buy that. Until the red line now closes under 79, this market is a buy. When it's under 79, that is gone, and that could lead to the market retracing then to that 18-day average of closes. So that's where I'm at in the charts right now there. In Apple, wow. Right into the area that I thought yesterday was the short covering zone, market getting beaten up further. So let's assume this market wants to let go. Well, this will be one of those markets where I told you the shopping list. I'd be looking really hard at the 200-week moving average as an investment, not a trade. There's a complete difference between the two. I might hold an investment for years. Trading can last hours. Are we in sync with each other on this? So that's what I think. Am I bearish? Yep. Is the market excessive on the daily chart? Yep. Do I ever teach to go short? Under a Bollinger Band? I never do it, and I still won't do it. Then we get to XLF, the financial sector, in that downtrend. And I've been pointing this out. I've been telling you that what the Fed's about to do is possibly invert the yield curve. And that's going to make all these banks, everybody thinks that it's going to be easy to step into these banks and just do, oh, they're going to be in great shape. If you take in money and you pay a deposit at a level here and you can only put it out for a loan here, that's the inversion. That's a problem. The traditional way is I'm going to give you a little bit of interest on your money, and I'm going to take that and I'm going to do a multiple of 40. I know it sounds funny, but it's true. And that's how I'm going to go out there and lend the money. Does that make sense? Okay, so you're feeling that pressure in the market. That's the fundamentals that I think are at work. And now you're down to the support zone. This is where I think today the short covering took place in the market. Disney, market coming down. So you've got a higher high, lower low. There is no trend. You fell back to the 18-day average of closes, the neutral spot. Even if it fell straight down to the Bollinger Band here, I still don't have a trend. It's out of the trend. In XLI, the industrial service, lower highs, lower lows. It's been at a downtrend for a while. It was here. Take a look. Lower high, lower low. You hit support, come up to the 18-day average, and this was the day that you turn the trend. Objective, the lower band. Now you're getting oversold, but you go right to that number, and today, let me give you a kiss. The market's right there. That was yesterday, actually. Today, you're down even more. Wherever it's going to go, it's going to go. Semiconductors, as much as I want to be friendly to them, I can't. I think you're caught in one of these waves of trading where you go like that back and forth. The boundaries, the upper and lower Bollinger Bands. You're oversold in a downtrend to get the climax of it, 190.47. The resistance on the way back up, 202.89 to 205.06, the 200-day average. Home builders, well, if you look today at the mortgage applications, double-digit losses in everything. The index, the refi, the new purchases. Interest rates are scaring people off to a degree. They're not super high, but they're scared. Terrible weather in the United States, right? Think of the time of year we're at. This is February 25th. Do you really do a lot of new home buying at this time of the year? No. Talk to me in the spring and we'll probably have a different market. Is the demand there for the all ends of housing? Absolutely. But are the prices insane? Yep. What'll drive that is the fact that rents are insane. So you get to the cities where the rents are crazy. Do you want to own? Do you want to rent? You know, sometimes you're priced out of a market. You have no choice. But rents go up for a reason. The cost of electric has gone up. The cost of gas has gone up. In many places, like I live in a terrible state where they just know one thing, to tax you to death on everything, be it your real estate taxes, be it I go to a store to buy whatever, the sales tax is insane. And of course, we have a state income tax, and we're always broke, okay? Thank you, Mr. Pritzker, our governor. In any case here, not a trend that is going there one way or the other that I see it. Then the energy sector, up and down, just whipping back and forth right here, not ready to go. You would think it would have moved up, wouldn't you, with if you're watching price of oil? But this is a different type of spider. Go look and see what that's made up out of. You got to go look at USO and some of the others to see what the energy, pure energy plays are doing. GLD. Who would want to be short gold in this environment? You got the combination of inflation. You have the idea that if the Fed gets too many rate hikes, the dollar will break. That's what I think's going on. And you got war. And we don't know that this war won't spread into a NATO area. We have no idea. That's the big unknown. Anytime you got 150,000 to 190,000 troops, depending on which news service you want to believe and which intelligence agency, anything can happen, right? We haven't seen this since World War II. So if you tell me you have experience in it, you have no experience in it. By the way, another crazy thing that's going on. Are you aware that today Russia told Cuba, you know, you have a $2.3 billion in loans with us, and you don't have to pay interest. We're going to defer that right now. Immediately, the horns in the back of my neck, and I do have them, they'll go up there. What do you think they did? I'm going, Cuban Missile Crisis. Let's make friends with Cuba so that we can make America really angry. What if we deploy there? You'll tell me it can't happen. This is a madman out of Russia. He's bright as can be. He's a land grabber. This is his shot at history. He knows it, and he's doing certain things. That's my opinion. And I know you can all criticize me for all you want, but that's an American point of view. And let me share this with you. My family's from Europe. We're refugees like so many of you that are watching me. And it doesn't matter. I come America first. That simple. When I look at GDX, all the way up, fighting. Now, take a look at this one. Here you have an outside day down. You just took out that high. Again, until you take out the lows of yesterday, which was 33.90, the odds favor you're going back up. Plus, you have an embedded reading. What did I tell you was going to happen just yesterday on these videos? Go look at this. I said, I think the pros will step in and buy the market because you have an embedded reading. They'll bail if you get a number under 79 in the last 2 minutes of trade. Copper. Copper's vulnerable right here for a bit. Number one, it never embedded. It got overbought. You're in a corrective break. You're not in a change in the overall pattern of the market. Maybe you're going to get back down here into the 39.76 level. This is a correction in that market. TLT. Well, it's very hard to play this market. Are you going to play the emotion of 100,000 troops plus marching into Ukraine? Or are you going to play that the interest rate plays are going to take place by the Fed? You're caught. And you see that. This was, for a long time, the interest rate plays. Then the Ukrainian situation in the past week has just escalated dramatically with the culmination of what? The Olympics. Putin was not going to hurt his friend. Gee, no chance. You'll get your Olympics, then I'll do my move, then I take center stage. And that's what's going on here. So, by the way, you got to give the guy credit. He is bright. You may not think that. I think Putin is extremely bright. Lower low, higher high. UUP, higher lows, higher high. This is your dollar index. So it's making its attempt at its breakout. Now, it's doing it in an overbought area. You're already up to 71.79 here. Be very careful of that. FXE, if the dollar goes up, the euro in theory should go down. I think I said that wrong yesterday. I was thinking about what I was saying. 40% of this is weighted in the dollar, but you'd never want to be long the dollar and long the euro. Doesn't make any sense. So this breaking down ties in with the other. Now, I have a real hard time with what's going on in the future side of it. I was telling clients, I don't mind saying this to be short, and I told them to take profit on the trades also yesterday. The chart setup isn't there. Watch the video tonight, and I'll try to clean that up as best as I can. But any move back over yesterday's high now, which was 105, let me get to it, 105.35. Here it is. That would just keep you ripped apart. Now, if from here it lets go, this is so important. That's where the pros don't want to see the number of. If it lets go here, you could be coming here. My dilemma is you're already oversold in a downtrend and the move hasn't even begun. I don't know what to do with something like that. So you put it all together, you try to come up with a game plan that might make sense, and that's the key word here, might make sense. And I think we do that for traders. You know, one of the things that we try to do here, if I can get this going, is the morning Spider ETF video. Let's see if I can get that again for you. It doesn't seem to want to do it, and I'll figure that out in a moment here. But to make a long story short, if you go to our website, and it's www.iraepstein.com, and you go up to the word research, the research is going to be for you how you get into and find out about my morning Spider ETFs. They're important. I wait until 9 o'clock to record them. Then I start. I want all the government reports to come out first. And you can get a slew of them that end at about 9 in the morning. You had that happening, in fact, the past couple of days. Then I want to start the recording because I want that money moved into the market off those reports. And then I'm going to cover 40 some odd charts, very specific. I want you to buy here. I want you to sell there. I'll give specifics on all the trades. On the weekends, I'm going to carry you into the idea of what do we do when we're looking at these markets in terms of weekly charts, the longer term. And then every now and then you'll hear me do what I just did. I will say, get your shopping list out there. I sent a friend a gift and it didn't arrive, and I got all these receipts and it went to the doorman, and they signed for it. So where's the gift? So to make a long story short on that, I got to deal with that in a few minutes. But that's what you want to do, just like we were talking here, just like Apple and other markets. You got to figure, what do you want to own, where do you want to own it, and your time frame cannot be that of a trader. It has to switch on that part to that of an investor. So I apologize. I just don't know why I can't get this thing going, but I will figure it out before I do the other videos. I'm Ira. You have a good night. Talk to you tomorrow.